Okay, so we're going to be doing for the next 3 Mondays some live classes, and these live classes are going to be different topics that are, of course, my goal as a trader is to control risk and extract alpha out of the markets. My job as a mentor is to give you tools and skills and strategies and techniques to help you become a profitable trader. And so today's video is going to be talking about my 6 rules of trading. You need a framework as a trader and kind of like these codes or principles and rules and ground rules that you always fall back upon. And they kind of direct your actions and choices and decisions that you make as a trader, whether you are making live trades in front of the screen or whether you're preparing to make trades, or whether you are just kind of setting yourself up, before the market opens, you're preparing. You have to have certain ground rules that really clarify, that kind of divide and say, this is what I don't do and this is what I do. And if you don't have that, and you don't have kind of these consistent rules for making decisions, this framework that when you're not totally sure, you fall back upon these rules, then you have nothing to fall back on. There's no solid ground. There's no foundation. There's no process for helping you make the decisions that you have to do as a trader. And so this lesson is specifically focused on these guiding ground rules and principles that, in my opinion, every trader should have. And if every trader were to have this in place, like if I could implant some like software programs inside you, that these would be ones that you always work with, that you always rely upon these to help make guiding decisions. So that's what we're going to talk about in this video. And this kind of, it was ironic timing because one of our students was having kind of trouble themselves creating rules. Even though we've created the rules in the course, they couldn't totally extract the rules themselves. They were confused and they didn't understand them. And so we had with our students created, very specific defining rules. Hey, if the price action is like this, you trade these strategies, you don't trade these strategies. If the price action is like this, you trade this strategy and you don't trade these ones. In this situation, do this. In this situation, do this. And it's important that you have that kind of framework and understanding. And so that was very, very specific and tailored for our members because they know our strategies. But if I had to have some like meta rules in place, that's what this is about. That's what today's lesson is about, the 6 rules of trading. Then on next Monday at 9 a.m. Pacific, we're going to do a class on how to improve your stop losses. What can you use in the data, in the statistics to improve your stop losses? So we're going to go over that as something. A lot of people, when they think about their stop losses, they think about, okay, well, do I make it based upon this candlestick pattern? Do I make it based upon this bar or the entry bar? Do I make it based on, these things? And while that's true, the bottom line is you should always be continually refining your stop loss process. You should always be improving. You should always be refining your stop loss process. And the way to do that is through statistics. And it's through your data. It's the analysis and the statistics in your trading performance journal. So we're going to teach you how to do that next Monday. Then after that, we're going to teach you how to improve your take profits and how do you find targets. And we're going to teach you the meta principles and then how do you dive into the statistics, your statistics, so that you can refine your stop loss and improve your take profit. So that will be the next 3 classes. We'll be doing this at 9 a.m. Pacific every Monday for the next 3 Mondays. So we hope to see you not just for the rest of this session tape, but those 2 as well. And if these live lessons do really well and y'all hit the like button and you leave comments in them and you say, hey, we really want to continue doing live classes like this, then we may continue doing this in the future. Instead of doing our weekly videos, we may do live classes, on Mondays, and then once a month do like a really cool video that we feel could be, something that should be done via video, not via live class or something like that. So that's pretty much it. So make sure you let us know by hitting the like button and letting us know in the comments. But for now, let's jump into my 6 rules for trading. So before we do, some people are saying hi, shout outs. Hello to you, Constantine. Hello to you, Olajuwon. John Oko, good to see you. And Sukunta Pen, good to see you as well. Okay, so this is absolutely your first job as a trader. if you want to know if you're a beginning trader or not, there's one litmus test that can tell you right off the bat. Every time you look at a trade, if the first thing you look at is, wow, this trade can go to here, I can make, if you're an FX trader, you're like, wow, I can make 300 pips, or wow, if you're a stock trader, I can make $10 on this one. If you're an option trader, like, wow, I can make, $7 premium on this one. If that is your first things that you focus on when looking at a trade is how much profit you can make, then congratulations, you've just demonstrated that you are a beginning trader. How do you know you are a pro trader? One of the key defining characteristics of a pro trader is that when they look at a potential trade opportunity, the first thing they look at is risk. What is my risk on this one? What is my downside on this one? It's also the same if you trying to get investors for, like, let's say you have a track record and you want to get investors for your account. The first thing they're going to be thinking about is, hey, how much risk does this trader take on? What's their average, losing streak? What's their average drawdown? What's their downside? That's what a professional investor is going to do. Same thing if you're also looking for investors for your business. If you've ever tried to raise capital or do any sort of seed rounds or funding rounds or anything like that, those investors, the first things they're going to be looking at is, what's my downside on this? What are the things that could go wrong that I would lose money on this? That is what professional investors do. That's what professional traders do. They look at what's my downside and what's my risk on this one. That's what they analyze first. And your first job as a trader is to control risk. This is why I started off with this is rule number 1, because it reframes your mindset. It forces you, if this is a guideline and a rule that you always follow, it forces you to reorient your mindset to not thinking about profits first and get seduced by that. Wow, I can make 500 pips on this FX trader. Wow, I can make $10 on this stock trader. Wow, that tends to, by looking at the things that you can gain first, what you can win first, it kind of seduces you and causes you to overlook the potential risks and downside in any given trade. That is why you need to reorient yourself and say, look, my first job as a trader is to control risk on every trade. And what is my risk on this trade? And what is my downside on this trade? So this first rule, by making the first rule controlling risk, reorients your thinking to what's my downside? What's my risk on this one here? Okay, is that manageable? Is that workable? Is that good? Is that not good? And if that passes the litmus test and you can control that, only then should you consider any trade. This has kind of important implications because there's been certain things that have happened recently in the stock market where traders can be put into situations where they cannot control risk. A lot of these short squeeze, gamma squeeze trades like AMC, like GameStop, GME, and Clove, and some of these others, you're going to see all kinds of videos on YouTube about the people who are talking about like, hey, I made 200K, I made 500K, I made $1 million on this. How many videos have you seen out there on YouTube with traders or mentors saying, wow, I lost 100,000 on this one here. Wow, I lost, $500,000 on this. Wow, I lost this. You're not going to hear about that. And that's because the goal of people, that are promoting themselves will always talk about their wins more than they will their losses. And the thing about it is that AMC and GME and all these things, they presented a lot of rosy markety type videos where, wow, I made hundreds of thousands in this, but you don't hear about the larger groups of people who actually lost money. A lot of these trades put traders in positions where their margin requirements increased drastically and they got margin called, where the markets moved well beyond what they thought it was going to do, and it either increased their margin or increased their risk or whatever it was. You don't hear about that. And that's the problem with people that are promoting their things and their services, is they're going to talk about, hey, I made all this money on this, but they're not going to talk about the risk they expose themselves to. And that is not what professional traders do. And sadly, it's, that markety type thing. Oh, I did all this, but they didn't quantify their risk. It puts beginning traders who are not able to control the risk on those situations in bad situations. And your job as a trader is to avoid as many of these bad situations as possible, which we'll get into later on why that's such a key thing. Because losses are much harder to make up. They take more wins to make up for those losses. And that's a key thing to understand. If you lose 10% and you need more than 10% to make all that up just to get back to where you were, that means you have to have more effort on the winning column after a big loss just to make up for one loss. Your job should always be avoiding the heavy risk situations as much as possible and controlling risk at every turn. So anytime you're getting into a trade, you should immediately be thinking, what is my risk and can I control the risk? If I can't, if I could potentially get into a situation where I may get margin called or this may force me to go outside of my risk parameters, don't take the trade. And if you're in that position and you're starting to push up against your risk parameters, get out. Because all it takes is one big loss and you will not be profitable for that year. There are certain percentage levels and certain statistics that show that once you get beyond a certain point, percentage-wise, down a certain percentage-wise, your chances of getting back to break even are like 5%. And we've done the analysis and we're looking to kind of do a meta-analysis on this. But from our initial statistics and studies, if you have just two 10% losing months in a year, your chances of getting back to break even are like 5%. That's all it takes, is 10% losing months in any given year. If they're back to back, your chances of getting back to break even are like 3%. And you don't want to be in that position. Hedge funds, they can cheat. Hedge funds and, money managers, they can cheat in those situations. Why? Because a hedge fund can just be like, we know we're not going to get back to break even at the end of the year. Why work the next 10 months just to get back to break even? F it. Let's close the account, start a new hedge fund, and then we don't have to worry about getting back to break even. You, on the other hand, don't have that luxury. If whatever your account is, let's say you have a $50,000 account and you lose 10% on one month and then you lose 10% on the next month, your chance of getting back to $50,000 by the end of the year is like less than 5%. And that means that you're going to work for the next 10 months and you're going to grind just to get back to break even and make no money at the end of the year. So why would you put yourself in that position where you have to work so hard just to make no money? You should avoid that situation to begin with by controlling risk. So the first rule and your most important rule, and this is why we did this first, is you should always control risk first. If you ever get into a trade where that trade could take you outside of your risk parameters, get out. When you're in profit or loss, just get out. Because getting out at that point is far better than getting out at the situation where you're outside your risk parameters and you may face a margin call. So super, super important. Life is so nice to hear this from an experienced and profitable trading educator. Thank you. I appreciate that. Yeah. You don't hear a lot of traders talking about this. You see so many videos about the money they made, all these things. Hey, I made a crush on AMC. I made all these things. But what I'm more concerned with is like, okay, so you made $500,000. Okay, that's cool. How much risk did you have to put in capital to do that? Did you have to put $100K to do that? And was that within your risk parameters? Did you have to put $250K? Did you have to put $500K? Did you have to put $1 million to make that $500K? How much risk did you have to put in to do that? Because the one trade in and of itself, that's fine and dandy, but a trader's career is rarely defined by one trade. It's by the hundreds of trades that you have to make over a year. And one trade doesn't necessarily guarantee you a winning year if you F up all these other trades later on. So how well have you controlled risk is super, super important. Okay. Oh yeah, this actually has to do with the controlling risk. So let's get into this. This is kind of why it's so important to understand that you want to avoid the situations that will put you into those outside your risk parameters, to those big loss situations. So if you look at it like this, you have a 10% drawdown, let's just say on one trade, you need 11.1% just to get back to break even. So if you have a $100,000 account, you lose 10K on one trade, you now need $11,100 just to get back to break even. Or you need 11.1%. You need that 10K, but 11.1% on 9K is what gets you back to break even. If you try and do 10% on 9K, you only have 99,000. So that means it's not like, oh, I lost 10%, I need to gain 10% on the next one. No, you have a lower account balance after that loss. You need to get a higher percentage return than your loss just to get back to break even. This is why you should never risk 10% on any given trade, because if you do take that loss, you now need to get a bigger win just to get back to break even. And it's super, super important. Every loss you take means that lowers your balance. That means you have to make a higher percentage return on the next trade just to recover that loss. So if losses take more energy to recover, then the one thing you want to do is always avoid the big loss, because that big loss requires a huge amount of energy just to get back to break even. Now this starts to increase drastically. If you notice, this number starts to accelerate. Even though your loss doubled, look at what happened to your return that you have to get back to break even. You lose 20% in a month. You need a 25% return just to get back to break even. So if you have a 100K account, you lose 20K on one trade, you now have an 80K account. If you get a 20% return, you lost 20% on the one trade, you try and do 20% on your 80K, well, that's only 16K back. You need to get a higher percentage return. You see that the bigger the loss, even though this loss doubles, the amount that you have to get back is more than double. So the bigger your losses, the more accelerative this is to the downside. That means the more and more energy or returns you have to gain just to recover. So as your losses get bigger, the amount that you have to return just to recover that is even bigger, and it keeps expanding the bigger your losses. That's why you never want to get into a situation where you take a big loss, because if you do, you have to work that much harder just to get back to break even. You lose 30% on any trade or any given month, you now need 42.9% just to get back to break even. Here, the gap is only 5%. Now it's 7.9%. You lose 40%. Now the gap is 26.7%. You lose 40%, you need to get a 66.7% return. Now, this is also what's interesting. Let's say you have a 5-year track record, and in your best year, you did 45%. So your best year, you did this. This was your best year. You made 45% in any given year. Okay, if you lose at the end of this year, let's just say last year you made 45%. Okay, well, what happens if in this next year you lose 40%? How much do you have to How much you have to make to get back just to break even, your high watermark? You need to get a 66.7% return just to get back to break even. But that's a problem, because in the last 5 years, you've never made more than 45%. Now you not just have to make your 45%, your best performing year ever, but you have to beat that out by an additional 21% return. So if you get into a situation where the percentage return you need just to get back to break even is greater than your best performing year, what do you think that's going to do to your mindset? You're going to be thinking, wow, my best year ever, I made 45%. Now I have to do 66.7%. That is not within your mindset, your self-image, your skills, your experience to be able to return 66.7%. So now you're in a predicament. You're in a hole that you've never been able to get out of. You've never done 66% on a given year. So what are you going to do if you're not thinking it through? You're going to think, shoot, well, I've never made 66% in a given year, and I don't want to work next year for free. So the only way to get back to break even is to increase my risk. It's to start risking more per trade. As long as I'm as consistently accurate, I should be fine. The problem with that is once you start increasing your risk profiles, you now actually destabilize your system. Every time you increase your risk profiles, your risk of ruin or blowing up that account goes up as well. And eventually that gets to a point where mathematically you're going to lose money. And it may require you to increase your risk to a certain level where your system breaks down. If you're 50% accurate, you make 1.5 R for every single win and you lose 1 R in every single loss, you mathematically have a good system at a certain percent risk. But if you continue to increase that percent risk, all it takes is one losing streak and you've blown up the account. So by losing more and going outside your risk and then putting yourself in a situation where you're not used to making that up, you now have to destabilize your system and strategies just to get back to break even. And so what's the solution to this? Always control risk and never get in the situation to begin with. How many of you have had a losing month or a losing trade to where you all of a sudden had to increase risk or adjust trade parameters or everything just to get back to break even? I'm willing to bet a lot of you have been in that situation. I'm willing to bet a lot of you have been in the situation where you now had to increase risk, throw on bigger trades, take bigger losses just to get back to break even. And that creates this spiral that becomes very hard to get out. Constantine's saying many times, yeah, super, super important. So this is why your first job is to always control risk. One last thing. You have a 50% loss on capital. You now need 100% return just to get back to break even. Mathematically, you have a 100K account. You lose 50%, you're down to 50K. What do you need to do? You need to double that account just to get back to break even. And that doesn't even get you to the point where you're making money on the year. And so don't ever put yourself in a situation where you go outside of your risk parameters, cause a big loss, need an even bigger set of wins just to get back to break even. Avoid that completely. You never hear about Warren Buffett having a big losing year that was outside his risk parameters. You just never hear that. He realized, I don't want to ever be in that situation. I'm not going to put myself in that situation. Therefore, I won't have to deal with it. Super, super important. Constantine saying, or Lewis is saying, yep, caused me a lot of pain in March. Yeah, a lot of people had that. And Constantine saying, usually ended up with burning my accounts. That's very common. You get outside your risk parameters, you start thinking, shit, I got to make this money back. Okay, well, I'll just risk more and then I should be fine. But then a few more losses happen. Pretty soon the account's just destroyed. You're in such a big hole that to get back to break even, it's just like next to impossible. Super, super important. Okay, so rule number 1. Rule number 2. You need these 4 skills to be a profitable trader. I'm going to go through the 4 skills, and then I'm going to kind of extrapolate on this and describe the scenarios that will happen if you are missing any one of these 4 skills. So this is super important. You need these 4 skills. You miss any one of these, you're not going to make money, at least consistently. You'll eventually be a losing trader. It's a matter of time. So you need skill number 1 is buying and selling decisions. You need some sort of framework and skill for making buying and selling decisions. Ours, I'll tell you about that very shortly. It's based upon the next rule. You need risk management skills, which we talked about in rule number 1. You need analytical skills. I don't mean the ability to analyze patterns in a chart. Yeah, that's helpful, but that really falls under the purview of your buying and selling decisions. So that would be under that meta skill. Analytical skills is the ability to look at your trading journal, your stats, your performance, and be able to pull the key pieces of data out of that help you improve your stop loss, your take profit, which instruments to trade, which not to trade, how can you find the leaks in it and plug those up, and how can you amplify your wins and make them stronger. That's what I mean when I talk about analytical skills. And you need mindset skills. This is the 4th skill. If you are missing any one of these skills, you will not be a consistently profitable trader. Flat out. No negotiating there. You miss any one of these, you will not be a profitable trader. Most of you have probably spent 90% of your energy on this skill. If you're a little more seasoned trader, you've realized risk management is important, but you've probably not put a whole lot of attention on analytical skills, and you've probably put a moderate amount of attention on mindset skills. The problem is that you actually need all 4 of these skills to be strong to make money trading. Let's describe the scenarios if you're missing any one of these skills. So for buying and selling decisions, if you don't have this skill in place, you won't have a consistent framework for getting in and out of trades, deciding your stop losses, take profit. Your stats will be all over the trace. Your trading will be incredibly inconsistent. I don't mean inconsistent in terms of risk management. You could have good risk management skills. You could have good analytical skills. You could have good mindset skills. But if you don't have a strategy with an edge, you're not going to make money trading. Your reason for getting in and out of one trade will be completely different than your reason for getting in and out of the next trade that looks exactly the same. Your decision to buy such and such in this type of trading environment, the next time you see that trend, that same exact trend, you won't have the same framework for making that buying to selling decision. So you won't make the same type of trade. And that will lead to a massive amount of inconsistency in trading performance. Also, because you don't have a consistent framework and rules for making your buying and selling decisions, there's no way for us to tell whether your strategy works or not. There's no way. A scientist, when they want to prove something statistically, they have to control every little variable. You have to do the same as a trader. If you take this trade and you take this pattern, you have to have the same framework for deciding your entry, stop loss, and take profit. If you don't, well then your decisions are going to be all over the place. Your risk is going to be all over the place. Where you get in is going to be all over the place. There's going to be no consistency there. You need a consistent framework for making your buying and selling decisions. I will share the foundation of our core, reasons for getting in and out of every trade. I'll share that in the next rule. So that's super, super important. Risk management, rule number 1, we've talked about that. If you don't have consistent risk management, you're going to face one of these many scenarios. The first one is that, let's say you change your percent risk every single trade. So on this first trade, you risk 5%. Your next trade, you risk 1%. The trade after that, you risk 3%. The trade after that, you risk 10%. Here's why that doesn't work. When you are about to make a trade, you have a degree of confidence that you're going to win, or that you're going to win that trade, but you don't know. There's no way you can know whether you're going to win that trade or not. I'm willing to bet you've made hundreds of trades that you thought were going to be gangster trades and they just totally flopped. And you've probably had tons of trades where you got in them and you're like, I don't know, this doesn't look so good. And then all of a sudden it just takes off, goes profitable, and hits your take profit. And you thought it wasn't going to be a winner. You've probably had hundreds of both scenarios. You've had tons of scenarios. You thought it was going to be a winner and it lost. You thought it was going to be a loser and it won. Some that you thought were going to be mixed and they were 100% perfect. Some that you thought were going to be totally wrong. They were 100% right. You don't know. And that's a problem, because if you risk 5% on this trade and you lose, and then you risk 1% on the next trade and you win, well, let's look at that. You have a 100K account, you risk 5%, you lose, you're now at a 95K account. You risk 1% on the next trade and you win. Okay, well, you only risked $950 and your average target is 2R, so you only made $1,850. You need 3+ of those just to get back your 5% loss. You don't know whether your next trade is going to be a win or a loss. And because you don't know, if you adjust your risk and you risk too much on your losses and then you don't risk enough on your wins, well then when you win, you're only gaining a little bit, and when you lose, you're losing a lot. That's a mathematical formula for a losing account. It's a disaster. If you were an investor in some trader's account, you would never, if you saw a trader doing that, you would never invest in that account. So why would you do that for yourself? When you look at your own account, you kind of have to look at it like an investor. Would I invest in this trader's account? Does he control risk consistently? Because you do not know, every single trade you have to risk the same, because if you don't, you could put yourself in a situation where you risk more on your losses, you risk less on your wins. Therefore, you don't get the full value of your wins, and you take a much bigger loss on your losses. That's like mathematical doom. You will never have a profitable account for that. So if you don't control risk, you're going to experience that situation. Also, if you don't control risk, you could eventually get yourself in a big hole. You can't get out of it. Flat out. And we've already demonstrated why you don't want to be in that situation. So hopefully I answered your question on this one here. Good to see you, Jason. Hello to you. Analytical skills. This is the third skill you need. This is the ability to look into your trading statistics, your trading journal, your trading performance, and then isolate key pieces of detail that will help you improve your performance. Why is this a necessary skill? I'm willing to bet that for all the instruments you are trading, let's say you're trading 5, 10, 20 instruments, whatever, that for all the instruments you're trading, there are some that you should not be trading, some that you consistently lose money on. I'm also willing to bet there are certain instruments that you tend to do really well on. Well, if you don't analyze your journal, you don't know which of those instruments, stocks, FX pairs, commodities, cryptos, whatever, that you lose consistently on, and you won't know which ones you consistently win on. That's important because if you, like, after a certain amount of trades, just cannot win on a particular instrument, you shouldn't trade that anymore. If you keep trading that when you know you shouldn't be trading it anymore, then you're constantly bleeding losses out of your account on something you're going to underperform on. And there's no point in that. There's no point in that. I've analyzed thousands of students' trading accounts. I don't think I've ever found a student who had an instrument they shouldn't trade. I've always found a student like, wow, you should not trade this instrument anymore. In fact, if you didn't trade this instrument over the last 6 months, you would be profitable. Sometimes not trading one instrument can be the difference between losing money and making money. I would probably say 30 to 50% of the students' accounts that I've analyzed, if they had not traded their worst instrument, they would be profitable. And that's powerful to know. Like, wow, I'm that close to being profitable. There are also certain instruments that traders tend to kill it on. If they had traded more of that and not traded the instruments that they consistently lost on, now they're not just profitable, they're like making gangster returns. So sometimes the difference between you and profitability is not your entry, stop loss, or take profit. Sometimes it's just the instruments you trade. That's helpful to know that. How do you figure that out? You build the analytical skills to do that. Other things that you can find in your analysis is that, wow, I shouldn't be trading these time frames. I consistently lose on these time frames. Wow, in this time frame, I consistently win. Okay, well then now you know what time frames you should be trading and should not be trading. So going forward, your performance should be improving drastically. There's also ways in your statistics to improve your stop loss that have nothing to do with chart patterns or candlesticks or your strategy, but simply have to do with statistically how well you do with stop losses. We're going to get into that in next Monday's video. And there's also situations where you can improve your take profit. You're consistently taking profit here, but you should be taking profit at a bigger target. And that's important to understand. Or maybe you're consistently going for a target that's too big. You should reduce it to this size. How do you know? Maybe the answer to that is not in the charts. It's in your stats. I will teach you how to do that in the third lesson in this series. So analytical skills are super, super important. If you don't have the analytical skills, you can be consistently losing money on instruments you shouldn't be trading. You can consistently be taking too big of profit targets. You can consistently be like using the wrong size stop losses. And if you don't have that skill, you won't know. And then you'll be consistently losing money in ways you should not. Super, super important. Mindset skills. This is both a straightforward experience for a lot of people, and for other people, it's not. Many of you have probably had the experience of the perfect trade setup. You should have taken it. You should have pulled the trigger. You didn't. You didn't because your last trade was a big loss, or you had a series of losses. You're on a losing streak, and you've lost your confidence. And you lost your confidence, and that losing confidence influenced your mindset enough that you didn't take the next trade. It was perfect setup, exactly as your strategy, and trading plan designed. You didn't take it. And then what happens? That trade becomes a winner. And maybe that one trade becomes a big enough winner that could have brought you out of that hole. It could have erased your losing streak. But you didn't take it. So not only did you not execute your trading plan because of your mindset, but then on top of it, you not executing your trading plan resulted in you not making up those losses or having a big winner and building your confidence back up. So then it becomes a double hit. Because what do you do if you've had a fear of taking trades and then you're like, okay, well, I'm not going to take this trade. I'm tired of losing. And then the next trade, exactly as your strategy plan designed, is a winner. And you realize you totally effed that up because you were afraid. You're going to beat yourself up even more. You're going to be like, wow, now I really effed up. I could have been back to break even. I could have been profitable now for the month. But because I didn't take that one trade, because I was afraid, I didn't do that, you're going to now beat yourself up. So now you take a second hit for the same mistake. Mindset. This is a great example of how your mindset affects your trading. Fear of missing out, fear of a loss, not executing your trading plan or strategy, not recognizing that, hey, I'm just off right now. I need to take a break. That is a mindset skill. Everybody has moments, professional or beginner, that they are off. Tom Brady has moments where he's off. Michael Jordan had games where he was off. The best of the best have games where they are off. Why would you think anything different for you? And so if you are having those moments when you're off, it's not a big deal if you can recognize with your mindset, hey, I'm off. I need to take a break. I need to reset, get my mind sharp again, get my confidence back, and then get back into the game. That is a mindset skill. If you don't have that, then you're going to be making more trades from a bad state, which most likely will lead to more bad trades. And then you punish yourself even more. God, I knew I shouldn't have been trading and I kept trading. Now I've lost more. I'm in a bigger hole. Ever had that experience? Put a 1 in the chat if you have. I will. I have. I've done it. We've all done it. So this is the experience you will have if you don't train your mindset skills. This is super important. So this is an important skill you need as a trader. Okay, number 3, super important rule. Flows are king. Order flow is king. We just did a video on this, which I will share. I will put actually, Sasha, actually, I can do that. Hold on one second. Let me post the link in there and I'll put this in the chat. Order flows are king. So I covered this in detail, but the bottom line is that if you are a fundamental trader or a sentiment trader or a technical trader or a flow-based trader, a lot of people say, oh, well, fundamentals drive the market or technicals drive the market. That argument is, it jumps the gun. It's actually missing the prior argument, which is that if you're a fundamental trader and you think fundamentals drive the market and then technicals follow, okay, but if you have a fundamental reason for getting in the market, if 1,000 of you have a fundamental reason for getting in the market and you don't hit a buy or sell button, does that fundamental reason have any influence in the market? No. If all the fundamental reasons on the planet for buying or selling a particular stock or currency or whatever, if those don't get activated into actual live trades, do those fundamental reasons influence the market? No. The same is for technical. The same is for sentiment. The same is for flow. What it all comes down to is it doesn't matter whether you're a technical, a fundamental, a sentiment, or flow-based trader. If you don't hit a buy and sell button, those reasons don't influence the market. And what does drive the price action you see on your charts is order flow. You take all the fundamental traders on the planet. If they don't hit the buy or sell button, those fundamental reasons are meaningless. You take all the technical traders on the planet. If they don't hit the buy and sell button, those technical reasons are meaningless. They only have meaning when they become order flow. If they don't become order flow, they have no meaning. So with that being said, the real thing that drives price is not the reason for buying and selling. It's whether the order flow happens or not. If there's no flows, the market doesn't move. If there's flows, the market will move. Why does the market move up? Because there's a greater imbalance to the buy side. Why does the market move down? Because there's a greater balance to the downside. Order flows is what drives price. Regardless of the reason, order flows is what drives price. There's no way around that. There's no renegotiating that. You cannot move the market unless there are flows. So flows is the final and ultimate reason why markets move. Flows are king. And so what's your job as a trader? It's to read and understand order flow. Luckily, price action teaches us how to do that. Luckily, volume and open interest and VWAP and time in sales and level 2 teach us how to read the order flow. So your job as a trader should be to realize, yeah, I may have this great fundamental reason to get long or short Tesla stock, but Maybe, there's some gangster announcement about this and that technology or something like that. Oh, but the stock's selling off today. That gangster reason doesn't mean anything. The market is selling off. The flows are dominant to the downside. I should not be buying this. Ultimately, it comes down to flows. Flows are king. And so if you can learn how to read the order flow in the market through all these other methods and tools, then you will have an advantage to what? Making your buying and selling decisions, the first skill. Super, super important. Morteza, I have a question out of the discussion. When I combine several indicators and take the back test for several months, my account moves to zero. Maybe I will get a good interest in a month or two. I use programming and MQL help combine all them. Where is the problem? It's hard for me to say because I don't have enough data. But if you're taking a bunch of indicators, you got to remember each indicator, they were designed for their own specific purpose and reason. They were designed to indicate something about the price action or movements in the market or volume, momentum, all these things. But the problem is that indicators are designed to be islands in and of themselves. They're not designed based upon the same framework that like a Bollinger Bands is. RSI is not designed with the same framework that Bollinger Bands was. Bollinger Bands are not designed with the same framework that MACD was. MACD was not designed with the same framework that VWAP was. Each indicator is designed for one specific reason, and that doesn't mean that that indicator matches or works well with other indicators. So it's like you're using a bunch of different tools that are never meant to work with each other. Like a hammer and nail are designed to work together. The hammer is designed to work with the nail. But what you're doing is you got a nail and then you have a saw. The saw is not meant to, maybe you like cut off the nail if it's like broken or you need to get rid of it, but you can't use the saw to hammer in the nail. So if you're using a bunch of indicators that are not designed to work with each other, then you're going to get just crazy results and crazy reasons for getting in and out of a market. It generally doesn't work to combine a bunch of indicators. Very rarely does that work. And one of my other rules will tell you why this methodology doesn't work long term. So it's hard for me to know because I don't have the data on that particular system or analysis or strategy or anything like that. But my guess is based on what you said, that's kind of the main problem is you're using like a saw and a nail and then a tape measure and then a leveler. They don't all work together, most of the time. So yeah, hopefully I answered your question. Okay, number 4, we got 4, 5, and 6. How are we doing on time? We're almost there. And if you haven't already, hit the like button, smash it. We appreciate it. Okay, so this kind of applies to you, Morteza, and everybody else. Strategies come and go. Skills never die. The best way that I can explain this is this. Let's say, hey, you have a strategy that you use to make buying and selling decisions in the stock market. Okay. How do you know if that strategy is underperforming or it's time to get rid of that strategy no longer works? How do you know? My students will be able to answer this question because we got in a deep discussion about this on Friday. But how do you know? How do you know? Does the strategy itself tell you this strategy is underperforming or no longer working or no longer valid? No. Does another strategy that you have tell you that your strategy A is no longer working? No. So the strategy itself doesn't tell you whether that strategy is working. Your other strategies won't tell you if that strategy is no longer working. So how do you know if a strategy is no longer working? The answer is skills. In this case, which skills? Analytical skills, price action skills. They can tell you whether your strategy is no longer working. So the skills is what tells you whether that strategy works or not. Okay, this is the first thing. How do you build strategies? Do you build strategies with other strategies? Possibly, but you can never build another strategy you can never build one new strategy purely from another strategy. You need other ingredients to build a new strategy. What ingredients, if you're building your first strategy from scratch, what ingredients do you need? What do you need in place to build that strategy? You need skills. You need the skills to recognize patterns in the market. Patterns that are repeatable. Patterns that occur enough to be worth it to execute that. If you have a strategy where the trade only comes up once every 3 years, that's not really an effective strategy. It doesn't happen frequent enough to be worth it. Maybe the strategy is frequent enough, but it's not accurate enough or it doesn't make enough money to do it, so it's not worth it. What helps you build strategies? Skills. Okay, so skills help you build the strategies to begin with, and they also tell you whether that strategy is working or not. It seems like there's something there. Maybe instead of the strategy being the most important thing, maybe I should be focusing on the thing which builds the strategies or tells me whether that strategy is working or not. What a novel idea. Holy cow. That's amazing. Wait a minute. Strategies don't work forever. All hedge funds have to redesign their strategies every 6 to 18 months. So strategies don't work forever. Skills tell me whether my strategy is still working or not. And skills is what helps me build my strategies. So should I keep focusing on the strategy? Or should I focus on the thing which helps me build the strategy and then tells me when the strategy no longer works and will allow me to build another strategy for the next environment? Whoa. What an idea. This is super important. This is something that most beginning traders fail to realize. Strategies, they come and go. I'm going to probably do a video. I've been thinking about this. I'd like to do a video where we look at like the hottest asset classes and the hottest markets over like the last 50, 100 years. I think when all is said and done, you're going to realize that the strategy that worked for like one decade would never work for the next decade. And then the strategy will work for that decade won't work for the prior decade, and it won't work for the next decade or the next hot market. So what you realize, and most of you don't realize this because you haven't been trading for as long as I have. I've been trading for over 20 years. I've gone through dozens and dozens of like hot markets where this strategy worked, but it didn't. It doesn't now. And this new one works, but it wouldn't in the past. And then this one works, but it wouldn't have worked in the prior two bull markets. Like I've gone through this enough times to realize, yeah, strategies just come and go. Skills, they never die. Is a golden rule. And when you understand that, then you stop spending so much time. You stop spending 90% of your time on the strategy, and you start spending the thing that helps you build the strategy and then fix the strategy or get rid of the strategy and build a new one. Skills. What are those skills? We went over them. The 4 skills you need to make money trading. Particularly in terms of strategies, you need the buying and selling decision that's built within your order flow and price action skills, and you need the analytical skills to do that. You also need the mindset skills to realize, hey, wait a minute. There's nothing wrong with me. I'm executing things well. I'm reading things correctly. It's just that this strategy no longer works. That's a combination of analytical skills and mindset skills. The mindset skill helps you realize that. Then you use the analytical skills to look at all the data and be like, yeah, this doesn't work anymore. This is underperforming. It's done. I need to get rid of it. Boom, move on. You need skills to do that. That is why we spend more time focusing on skills than we do strategies. Once you have the skills in place, you will have no problem building strategies. Building strategies, testing strategies, creating strategies that work. The creating strategies, building, testing, creating strategies that work, that is not the tough part. It is only tough if you don't have the skills in place. If you don't have the skills in place, building, testing, creating strategies that work, You won't be able to do it. If you have those skills in place, you will consistently be able to come up with new strategies that work. That's why people get so caught up in the strategies. And this is the dirty secret that those like strategy sellers or system sellers or robot sellers, this is the dirty secret they don't tell you. And they know this because if they've been in the game long enough, they've seen, oh yeah, this first strategy that we created back in 2011 doesn't work today. It worked for like 2 years and now we had to get another strategy. I'm willing to bet if you find a strategy seller and they've been around long enough, the strategy they have today is not what it was in the beginning. They've either reconfigured the strategy or they've completed a totally new strategy. I know trading educators that have literally over the last 10, 20 years created dozens and dozens and dozens of new strategies that were great this year. And then the next year you're like, hey, what about that strategy you had back there? We're like, oh, I don't use that anymore. Okay, well then why'd you sell it? Oh, it was great for that year. Okay, but it's not making you money anymore and you're still selling it. Yeah. You know, that's terrible. That's a horrible business practice. The dirty secret amongst the robot and the EA and the system sellers is that they know if they've been in it long enough, the strategy they have today is not the strategy they had at day one. And between day one and day 1,000, that strategy is going to change many different times, or they're going to need totally different strategies to keep making money. The problem is that's a rat race. Like that never ends. It's like being on the hamster wheel. You constantly have to like get a new strategy, get a new strategy, get a new strategy, get a new strategy, get a new strategy. Okay, you can do that, but that's a dog chasing its tail. You're never going to catch it. What's the way to get out of that? It's to say, I'm not going to spend all my time on the strategy. I'm going to build these skills that can allow me to build the strategies and can allow me to adapt to any environment. That's what we teach. We teach strategies, but the first core things that we nail in, that we make sure that every student is solid in, is those skills. Because if you don't have that, the strategies are completely useless. Period. No way around it. No way around it. This quote extends further than trading, but in life as well. It extends into all kinds of things. For example, in football, American football, some of the strategies that worked on defense in the 60s and 70s won't work today. They won't work. Some of the strategies that worked in the year 2000 won't work today. Some of the defenses and offenses that worked back then won't work today. What does work are skills. Good tackling, good position, good read of the quarterback, good understanding of, motion tactics and things like that. Those are skills. They are just as important today as they were 20 years ago. In the game of soccer, what most people call football in the world. Dribbling, is it just as important today as it was 50 years ago? Yes. Is passing just as important as it was 50 years ago? Yes. Is footwork just as important as it was 50 years ago? Yes. What are passing, dribbling, footwork? Those are skills, and they will never die. It's in there in sports, it's in there in trading, it's in there in all kinds of things. Your focus should be on skills. Tom Brady, the guy's, 6, 7, I forget how many rings he has at this point, 6 or 7 Super Bowl championships. Does he stop practicing his throwing mechanic? No. He's constantly refining it to get it just a little bit better each time. What is he focusing on? Skills. What does he focus on every time he comes up to the line? Reading defense. That's a skill. It's not a strategy. It's a skill because the defenses can change. And the strategy he has for reading one defense won't make a difference on another defense. But what he can do is the skill to read that defense and understand what is the most probabilistic outcome of that defense. That's why he has, as of last year, in his mid-40s, the second best release time. That means that the moment the ball touches his hands, the guy, the center hikes it, he touches it and goes to throw it. He had the second fastest release time. Is it because he's the most athletic? Hell no. Why does he have the second fastest release time? Because his brain has gotten so good at pattern recognition skills of defenses that he knows Most likely, the defense he's playing, this is where he needs to throw. This is their weak spot. This is their strength. That is a skill. Strategies come and go. Skills never die. Super, super important. Most beginning traders never get past this stage. And if you don't get past this stage, you'll be constantly chasing over that strategy. And that strategy, sadly, will no longer work after a certain point in time, and you won't have the skills to know when that strategy no longer works. And then you'll be like, wow, the strategy works so good. Why am I losing money now? Yeah, because you focused on that and not the skills. Super important lesson. Number 5, if you're not clear, do not trade. So, before you get into a trade, you should have certain things that you are clear on. You should be clear on what is your reason for getting in that trade. Hey, it's this pattern, it's this structure, the order flow is supportive of this. We saw a big buyer come on the tape at a key level in the trend direction for the day. There should be a reason for getting into that. That should be clear. On top of that, your reason for getting in is not the only thing you should be clear about. You need to be clear about where do you get out of the trade. Okay, this is my reason for getting in, but I need to know exactly where do I get out. I need to know why I get out. You need to be totally clear on why you get out of each trade. If you're not, you shouldn't take that trade. If you don't have a clear reason for getting in the trade, you shouldn't take the trade. Now, if you have a clear reason for getting in the trade, but you don't have a clear reason for getting out of the trade, you still should not take the trade. If you have a clear reason for getting in the trade, if you have a clear reason for getting out of the trade, but you don't have a clear level or price that you should be taking profit or a reason to get out of that trade for profit, then again, you shouldn't be taking that trade. Super, super important. And the last thing you should be clear on is, what am I risking on this trade? So you need to be clear on 4 things before you get into any one trade. What is my reason for getting in this trade? This pattern, this structure, this strategy, this setup, whatever. What is my reason for getting out of this trade for a loss? My reason to exit. What is my reason for getting out? You need to be clear on that. You need to be clear on getting out of the trade for a profit. Hey, if it hits this price, I don't think it's going to go much more, so I want to be out at this point. Or my system or strategy or momentum readings are telling me this thing has lost momentum. It's time for me to get out of it. You have to have a reason for getting out of the trade for profit, and you have to be clear on that from the beginning. And then the 4th thing you need to be clear on every single trade is, what am I risking on this trade? If you have a fixed risk management structure and framework and parameters, that's not that hard to do. All you have to do is just do the calculation super quick. Okay, I'm risking 1% on this trade. No problem. It's, 5,000 shares, 2,000 shares, whatever it is. That's my risk. You have to be clear on that. You have to be clear on those 4 things to get in any single trade. If you are not clear on any one of those 4 things, you should not get into the trade. That doesn't mean you shouldn't take the trade. You just need to get clear on all 4 of those things. So maybe you're clear on your reason for getting in. Maybe you're clear on your reason for getting out for a loss. Maybe you're clear on your risk management, but you're not clear on your take profit. Okay, well then get clear on your take profit. And then once you have that, then you should get in the trade. If you don't, do not get in the trade. Any one of those 4 things are missing, do not get in that trade. Super, super important. I'm willing to bet that if you were to always use that filter, there's probably some trades you would never get into. I have a lot of students who they want to get in the trade. They think it's going to move up or down or something like that, but they're not sure. They don't have a legitimate reason to get in. And I always tell them, like, look, if you don't have a clear read on the price action, you should not get into that trade because that violates rule number 1. Not rule number 1. It violates reason number 1 for getting in a trade in terms of what you need to be clear on. Why? Your buying and selling decision. Based on this pattern, probabilistically, I think this is going to go up. If you're not clear on that, you shouldn't get in it. This is super, super important. If you're not clear on the price action, you can't read it, I don't know. I think it's bullish, but I don't see this, and this kind of looks confusing me, and the price really isn't at the level I want, and this, I don't really see much support here, and this and that. Just don't take that trade. Don't take it. Find something else. If anything, as a beginning trader, you should only be taking trades that you're ultra clear on your why for getting in. And you also need those other 3 reasons to be clear on. If you have all 4 of those, take the trade. Because when you do take the trade, whether it's a win or a loss, you'll have felt like, wow, I made a decision on something that I felt really clear and confident on. And I won or I lost, but I followed my rules. I was clear on it. I made a decision from that point. If you start making decisions from like, I don't know why I should get in. This doesn't look clear to me. Maybe I ought to get in this price or this price. And it doesn't look like this pattern. And then you hit the button and then you lose. You're going to be like, why did I make that decision to get in when I didn't have any reason to get in? And then you're going to take that hit, and then you're going to take the second hit. You're going to start beating yourself up for making that bad decision. Your decision-making process was flawed. You're going to take that hit, and then you're going to beat yourself up for making and risking money on a flawed decision-making process. Super, super important. Okay, so let's see here. A couple questions. Jason Kidd, what if I risk 0.5% on intraday trades and 1% on swing trades? I'm totally cool with that. I would suggest separating your accounts. Have an intraday trading account and have a swing trading account. Because the problem is that you could have a bunch of good intraday winning trades. You could win 5 intraday winning trades on the day, which puts you up, let's say 2.5%, 3%, 4%. But then you lose 5 swing trades. You worked really hard on your day trades. Your swing trades didn't work so well. You're comparing 2 levels of risk. It's not worth it. So I would look at that and just be like, okay, let's separate the accounts. That's what I would do with that. That's a good question. Ravi M says, too many traders focus on looking for inside bar, pin bar, head and shoulders without understanding what the market is communicating. I totally agree with you. Thank you for explaining all the elements that lead to trading success. I appreciate that, Ravi. David Fadiano says, strategies are missing in the APA course. No, there aren't. We have strategies in the APA course. We have very clear strategies in the APA course. What is the LLT? That's the strategy. For old-time members, what was the 3P? That was a strategy. What was the RRL? That was a strategy. What was the PBO? That's a strategy. Those are strategies. They're not missing from the APA course. You're just conflating them to be skills. No, what built those strategies was price action order flow skills. So yes, there are strategies in the APA course. The APA course is closed. We don't have that course anymore. Our new course also starts off with skills and has strategies. So all our courses have that. And Jeremy's saying, yeah, it definitely does have strategies. All of our courses have strategies. We would never teach a course. We would never teach a trading course without strategies. But we always teach our courses so that the first thing you learn is the skills that help regulate and build and determine whether that strategy is working. Because we know skills come first. Super important. Okay, last one, and then I got to wrap this up because I got a presentation with Benzinga in about 20 minutes, which will be on options trading. So if you're interested in options trading or you've done options trading, stay tuned. We'll be posting the link very shortly in our community channel and Discord for our members. But I'll be doing a 30-minute presentation talking about option trades I'm looking at for the week. So we've talked about this. These are your 4 reasons for getting out of trade. This is the 6th one. This is super important. Always be growing, always be improving, always be refining. As someone who's been in this for 20 years, I can tell you that, like, for example, when I was working for the brokerage, which is 04 to 06, 04, 05, 06, we made money. Would those strategies and skills that I had, would those strategies I had in place allow me to make money today? No. Would the skills I have allow me to make money today? Some of them. But the market's evolved. The market has evolved. Markets are always evolving. Volatility is always evolving. It's either expanding or contracting. Volatility, expanding, and contracting alone means different strategies, means different skills. You have to have a different set of skills and strategies for a low volatility environment versus a high volatility environment. You also have to be able to tell the difference, which is a skill, between the market going from low to high volatility or high to low volatility, or when there's a potential for high or low volatility. That's a skill. So the skills I had in 2004, 2005, 2006, could they allow me to make money today? Some of them could. Some of them might not. But they definitely wouldn't allow me to make as much money this year or last year as I did last year. This year's not done yet. But last year, we posted roughly 72% return. I say that because my journal doesn't give me the specifics on percent return. It's like the one stat they don't give. I don't know why they don't do it. I had to do it manually, and we just did a rough calculation, but we made approximately 72% return on capital last year. We shared our performance, all of it, accuracy, all these things. We shared all that. Could I have made a 72% return last year with the skills I had in 2004? No. Could Tom Brady have won a Super Bowl in Tampa Bay last year with the skills he had in 2001? No. Markets are always evolving. Volatility is always changing. What is hot this year is not going to be necessarily hot next year. And what is hot this year, you will need a specific set of skills to trade, but you may need more skills or different skills to trade the hot market next year. What that means is that you can never feel like, oh, I have XYZ skills, I will always make money, I will always perform at my best. No. Basketball players, soccer players, football players, cricket players, they're always evolving their skills. Would Pele have been as good a player today as he was in the 1960s? Probably not. The game's faster. The game's faster than it was back in the 1960s and 70s. Some of the strategies today would totally snuff out Pele. He would just be a good player, not the best player in the world. In the future, some of the strategies that Tom Brady was able to win with now, he might not have been able to win in the future 30, 40, 50 years down the line. Because defensive might have figured out ways to solve his issue or his challenges or his skill set. The market is always evolving. That means your skills have to constantly not be evolving, not necessarily changing, but they should always be getting deeper and deeper and deeper. Your core skills should always be getting deeper and deeper and deeper. Just like Messi took the skill of dribbling and footwork and just went deep and deeper and deeper and deeper. He took those two skills and perfected them to higher and higher levels consistently. That's what your job is as a trader. You should always be getting with your risk management skills, getting better with that. You should always be getting better with your buying and selling decisions. You should always be getting better with your analytical decisions. You should always be getting better with your mindset skills. You should always be getting better at those four skills. You should always be growing, improving, and refining those four skills. If you do that, you'll get better and better with the same skills, the same strategies, the same setups, the same patterns. What I can extract out of my best setup today, the core structure of that setup is the same 10, 20 years ago. But what I can get out of it today is far better than what I could have gotten back out of it 15, 20 years ago. The same goes for you. You need to always be growing, always be improving, always be refining. There is no end point. There is no, okay, I've had my first profitable year. I don't need to change. I don't need to evolve. I don't need to grow. I can be profitable for the next 100 years based on this skill level. No, because the market's always evolving. You have to evolve with it. You have to evolve with it. The market is different today than it was 50, 100 years ago. There are certain core things that still apply. You still need mindset skills back then as you did today. You still need analytical skills back then as you did today. You still need buying and selling decisions back then as you did today. You still need risk management skills as you did back then as you did today. Those core skills, they will never die. They will never die. But by building additional skills today, you now have more tools and weapons and more refined skills to get more out of each trade. There is no end point in that. There's no point where it's like, yeah, I'm done. Don't need to do any more work, no more practice. Kobe Bryant practiced as hard as he did in his last year as he did in his first year? Michael Jordan, did he ever stop practicing free throws? Even after winning 3, 4, 5 championships? No. Did he stop practicing defense or offense or his fadeaway jumper? No. Does Tom Brady stop practicing throwing even though he's won 6, 7 championships? No. So why would you think it's any different for you? That thing never stops. That training never stops. And the great thing about it is that as you get better and better, trading just gets more and more fun. The more you can do in the markets, the better your skills get, the more empowered you feel. The more you realize, wow, I'm extracting way more out of this trade than I would 10 years ago. That feels good. And to constantly be taking yourself to the next level, it just builds confidence. And pretty soon that confidence becomes like this really big snowball that is this unstoppable force, or is a very resilient force. Continually building your mindset skills means you can handle bigger and bigger situations, bigger and bigger drawdowns or losing situations or challenges. Maybe a few years ago you couldn't handle a $10,000 loss. Now you can. Could you handle a $100,000 loss right now? Probably not, but maybe in a few years you could. And that just builds your skills and confidence. It raises your thermometer of what it is possible for you to make. And you need to constantly be challenging that to the next level. That process never stops. Okay, so that's it. My 6 rules for trading. Chris, have you ever heard of bellows breathing? If so, what are your thoughts on that? I've never heard of it. We do teach a breathing practice to our members in the course. And for our pre-market preparation, we actually teach them a very specific breathing practice, which is based upon science and scientific data and studies. Hey, this helps benefit this, this, and this. We teach that practice. So I can't really comment on this one. I don't know this one. But yeah, we believe breathing is a very important thing. It's a very important physiological skill and mindset skill to be able to manage, control, not necessarily like control as in like force the breath, but more of like manage my breath in the important times. It's a very important skill, and we teach that. Yeah. So any last questions before we wrap it up? I want to get you the link. We're going to post on our community channel the link for the live session on Benzinga, where I'll be talking about options. For those of you who are interested in options, want to learn about options, or check out some option trades I'm looking at for this week. So I got about 10 minutes before I go live there. I think it's a form of yoga. Yeah, no idea. I haven't heard of it, so it's hard for me to comment on that. But any last questions before we wrap this up? And did you learn something from this? Did you guys like this live class format? Like, did you get something out of this? If so, let me know in the chat. And let me know in the comments below, and hit that like button. We appreciate it. Yes, that's what I'm trying to do. Copy that. This is great. You enjoyed it. Good. I'm glad to hear. That's good. Busy guy this Monday, indeed. I know. I'm supposed to be like on semi-vacation right now. Yeah, I know. But I made my commitment to Benzinga. I'll keep doing that. Thank you, Chris. When one subscribed to your price section isn't lifetime access. It is not. We have on our TTM course, it's 1-year access. Then you can buy follow-up subscriptions for a year after that, because you're not just buying access to the course material. And Sasha just posted this. Let me get it so I can share this. Here's the link to Benzinga. I'll be on in about 10 minutes. But you're not just buying access to the course material and the lessons and strategies. You're also getting access to our pre-market live analysis. You're getting access to my live trade. Like, I'm in the live trade room for anywhere from a couple hours to like 4 hours a day. So you're getting access to my live trades. Those are ongoing services, and they're all part of the TTM course. So no, it's not lifetime access, because you're getting ongoing training. We have ongoing webinars for members every Friday where we review their trades, we answer their questions, we go through all that. That ongoing service is not, it's not like a one-time fee. Like, you don't go to your car dealership and say, can I pay for one oil change and then get oil changes for the rest of my life? It doesn't work that way. You don't go to your gym and say, hey, can I pay for one private session and then get unlimited like private sessions for the next 50 years? It doesn't work like that. You don't go to your dentist and say, hey, can I pay for a cleaning and you give me cleanings for the rest of my life and surgeries and all this stuff. It doesn't work like that. It's the same for this. So yeah, it's not lifetime access. You get access for a year, and if you want to resubscribe after that year, then it's a much cheaper fee after that. So yeah. Okay, can I pay half now and half later if I were to buy your mindset course, which I really need? We don't do partial payments, so you wouldn't get access until you have all the payments complete. We did that, and too many people just decided to take whatever they got and ran, and sorry, but a few people ruined it for a lot of people, and so we just realized that sadly over the internet, especially if you don't know the person, people are not as trustworthy as they make themselves out to be. So we did an honor system and it didn't work, and so we scrapped the honor system. I hate to say it, but yeah. Okay, I'm going to wrap it up for today. Great having everybody here. I hope you enjoyed this. I hope you got something out of this. Next week, tune in. We're going to be talking about how to improve your stop losses without having to do anything different on the chart. We're going to teach you just through pure stats alone how to improve your stop losses. Then after that, the following Monday, we'll teach you how to improve your take profits. Again, outside of technical skills, but how to look at your stats and improve your take profit targets. So I hope to see you for that. With that being said, good luck trading, everybody. I do hope to see you on Benzinga. If I don't, I will be here this Wednesday for a pre-market live stream. And then members, I'll see you on Friday for the member webinar. So good luck trading, everybody. Be smart, be safe, and I'll see you next time. Take care, everyone.